Hi everyone, my name is Macias and I am currently a student at National University working towards my master's degree of Science and Educational Counseling. I also work for the ABC Unified School District as a college and career specialist. As a college and career specialist, I'm required to wear several hats. However, my number one priority is to ensure that all of our seniors at our school have a post-high school plan. Whatever this plan may look like, my job is to help them reach their goals. Some of my job responsibilities include assisting seniors fill out their college application, financial aid application, implementing educational guidance, helping students build a resume, and many more. Furthermore, I am also in charge of providing information to all our students regarding scholarships, military, internships, and job opportunities. In efforts to promote college readiness, I also organize events such as College Night, which exposes our students to several colleges and universities. My number one focus is to provide students with proper guidance and resources so that they could better understand the path they want to take after they graduate from high school. I am currently working for my former high school. At such a young age, I recall acknowledging that my school required more opportunities for growth, programs, and most importantly, guidance. While there were many caring adults that were sensitive and respectful to the cultural differences that were on our campus, unfortunately, there was a few that could have done a little more. When I went off to college, I was unsure of the career path that I wanted to take. All I knew was that I had a passion for helping others. I ended up pursuing my bachelor's degree in psychology from the California State University of Long Beach. As soon as I graduated, I immediately knew I wanted to work for my former high school. Fortunately enough, an opportunity came and I got the job as a college and career specialist. It didn't take long for me to fall in love with my job. Till this day, I could genuinely say that I enjoy working with young people and being able to be a part of their growth and educational development. Right after high school, my parents gave me a tremendous reality check. I was now being considered a responsible young adult. As an adult, I was expected to pitch in for food, essentials, and most importantly, I was now being required to pay rent. In addition to my new responsibilities, my parents gave me 2 months to look for a job. Keep in mind that I had just started college. As you can imagine, finishing up high school and balancing all of these new responsibilities, especially my financial obligations, was incredibly tough, which is why I'm here today. I hope to help you learn more about the importance of personal spending through my own experiences. Let's start with some definitions. One of the first things that we need to discuss regarding personal spendings is cash. Cash refers to money in the form of bills or coins. When I started working, my form of payment was cash. Getting paid cash was a blessing in disguise for me because it allowed me to stay on track. As a newly independent young adult, I had to learn how to budget my money. Making a plan for how I was going to spend my money allowed me to live my life within my own means. Although there are numerous strategies for budgeting, my personal favorite was the budgeting spreadsheet method. This method was perfect for me because it allowed me to organize my money since I didn't have a checking account. The simplicity of this method allows you to create your spreadsheet any way you want, as long as you remember to plan your budget by making your expenses less than your income. My parents never failed to highlight the importance of saving money. Having a budget allowed me to have that extra money for me to save aside. It wasn't always easy to budget. In the beginning, I'm not gonna lie, it was pretty tough. I would constantly be tempted to take some money from my emergency funds, especially when I wanted to go out with my friends or do something fun. However, sticking to my plan allowed me to eventually achieve many of my financial goals as I was able to buy my first car cash. Using cash has numerous benefits, especially for those who are trying to save money. One of the most significant advantages of paying with cash is that you're limited to how much you could spend. If you don't have the money, you protect yourself from swiping your card or using up your savings. Furthermore, many places such as restaurants have fees for paying with credit cards or debit cards. Ultimately, paying with cash empowers you to only spend what you have. Now that we have a better understanding of what cash is, it is necessary to discuss our next term. Checks refer to a written order for a bank to pay money. Although checks are an easy and convenient way to pay, they are not my preferred method of payment. However, I have used checks in the past before for things such as requesting direct deposit. For those of you who have jobs, you might be familiar with this term. A direct deposit is used as a form of payment by your employer, meaning the company you work for. Before installing direct deposit, my employer would pay me through checks. These checks would be mailed to my home address. I then have to deposit these checks to my bank account in order for me to have access to my funds. Due to the advancement in technology, checks are not as popular as they were in earlier days. To some people, including myself, checks are an old-fashioned way to make payments, mainly because of all of the alternatives we now have. In today's society, paying electronically or with credit or debit cards has become so available. Access to quick form of payments such as Zelle and Venmo has slowly replaced the usage of checks. Nevertheless, we cannot ignore the advantages of paying with checks. When you use checks, you do not have to worry about carrying a large amount of cash. Checks are a safe way to mail compared to cash, and if lost, you can easily cancel your check. Although checks are not as popular nowadays, we cannot ignore their existence. Now, let's talk about a term that we are all familiar with. Debit card is a card that looks like a credit card but operates like cash. Money is immediately subtracted from the cardholder's bank account when a purchase is made. I opened up my first checking account the minute I became a US resident. Having a checking account allowed me to carry all of my money in one simple card. As much as I loved carrying cash around due to budgeting purposes, I would always find myself misplacing or losing my money. The simplicity of cashless transactions were beneficial for me because I knew that misplacing or losing my money was no longer going to be an issue. Owning a debit card was definitely a game changer for me. I no longer had to worry about carrying enough cash or losing it. One of the features that allowed me to have control over my checking account was downloading my bank's mobile app. This allowed me to check my balance anytime and anywhere. Besides the security and comfort of owning a debit card, there are also multiple benefits of having one. Having a debit card prevents you from getting into debt. Unlike cash, they offer thief protection services. Additionally, immediate payment holds you accountable to spend only the money that you have, limiting impulsive or unnecessary purchases. So far, we've gone over cash, checks, and debit cards. I think that we could all agree that these three terms are relatively similar as they only allow you to spend the money that you have. However, you also have access to borrowing money, which brings us to our next term. A credit card is a card authorizing the holder to buy goods and services that can be paid for later. Owning a credit card was a blessing and a curse for me. The older I got, the more frequently I was told by adults that I had to start building my credit. Like many of you, I had no idea what building credit was. All I knew was that I had to do it. Since I had somewhat mastered the budgeting system and I had accomplished a few of my financial goals, I thought to myself, well, how hard can this really be? I went in blindly when I applied to my first credit card. I say blindly because I didn't take the time to learn and fully understand the terms and conditions such as late fees, interest rates, and in some cases, yearly fees. It became effortless for me to just swipe, and spend the money I obviously did not have. Because I was able to buy now and pay later, my shopping became impulsive. It didn't take long for me to realize that I had gotten myself in a huge hole. Yup, you guessed it. I was 21 years old and in a $4,000 debt. Fortunately, I was able to correct my mistakes and quickly pay back the money that I owed. As young adults, I understand that it could be extremely easy to spend money, especially if you don't feel it. But based on my experience, I could promise you that it's not worth the stress. Of course, credit cards are not all bad. If used correctly and responsibly, credit cards could serve as great resources. Credit cards can financially assist you in case of an emergency. They can help you build or increase your credit, which you will eventually need for big purchases such as buying a car. Lastly, many credit cards offer rewards and cash back. As I mentioned earlier, I applied for my first credit card blindly. However, when the time comes, I wouldn't want that to be your case. It is necessary to be aware of what you are agreeing to and what you are signing up for. Always make sure to go over all of the terms and conditions. Annual percentage rate is the amount of interest charged for any unpaid balance. Understanding what APR is and how it works can be a little complicated. At least it was for me. When we are talking about APR, we are talking about the approximate yearly cost for borrowing money from a financial institution, for example, banks such as Chase. A few financial products that have APR include credit cards, personal loans, mortgages, and auto loans. APR includes fees involved in getting the loan, in addition to interest rates, and then converts those to one annual fee. So, why is APR important? You must be aware of the APR you're paying on any debt you take out because it is the price you are paying to borrow that money. Due to the debt that I placed myself in when I was 21 years old, I have now learned to read and understand all terms and conditions before I agree or I sign to anything. Always remember that there is no dumb questions. Don't be afraid to ask for further explanations if you don't understand the terms or conditions you are signing up for. Minimum payment due is the smallest amount that can be paid to meet loan requirements. By now, many of you might have already realized that managing your personal spendings and being successful doesn't happen overnight. Instead, it is a learning process that comes with multiple highs and lows. Based on my experience, I was able to somewhat master budgeting right after high school, but then later failed in managing my credit cards. However, I was able to turn my mistakes into learning opportunities. Even if you have downfalls, don't let that discourage you. One of the things I focused on when I was fixing my credit was making sure that my payments were always on time. I constantly aimed to pay my monthly balance in full amounts to avoid interest charges. So, what happens if you were to miss a payment? Okay, so now that you missed one of your monthly payments, you are still required to pay that original monthly payment amount. But as a punishment, lenders add a late fee, resulting in a higher payment for that month. If you constantly miss your payments, your credit score can negatively be impacted. For this exact reason, you must know how much your monthly minimum payment is and when it's due to avoid any late fee charges. I became quite good at this when I went back to my budgeting spreadsheet because it allowed me to take notes of my payments, the amounts, and when they were due. Credit limit is the maximum a card holder can borrow. It is recommended that card holders keep a balance of no more than 25% of the credit limit. Going back to the story that I had shared with you guys earlier, the one where I applied to my first credit card and got into a $4,000 debt. Okay, well, check this out. When I got approved for that same credit card, I knew that my credit limit was $1,000. Everything was going great, payments were on time. I mean, what can possibly go wrong, right? Well, actually, a lot can. As I mentioned earlier, I didn't take the time to read and fully understand the terms and conditions this credit card came with. Because of that, I didn't realize that my credit limit had gradually increased from $1,000 to $4,000. When you first apply to a credit card, your credit card issuer determines your credit limit. To determine the amount of money that you are eligible for, they examine factors such as your income, current debt, and credit history. One of the most important things to know about your credit card is your credit limit, not only when you apply, but during as well. It is important to note that exceeding your credit limit or even getting close to it can impact your credit score. When the time comes and you're all old enough to apply for a credit card, consider checking your credit limit regularly. Now, let's go ahead and shift gears and move on to our next term. Credit score refers to a standardized measurement of the potential to repay a debt. A credit score is a number ranging between 300 and 850. The higher your credit score is, the more eligible you become to borrow money. Your credit score evaluates how likely you'll be able to pay back your loan or credit card. Your credit score is a significant number that could either cost you or save you a lot of money throughout your life. I found that having an excellent credit score was beneficial for me because it allowed me to pay lower interest rates in all of my big purchases. However, it is up to you to build and maintain a good credit score. Here are a few tips that have worked for me. 1. Make sure to always pay your bills on time. 2. Keep your balances low on your credit cards. 3. Do not apply to too many credit cards. Only apply as needed. Now, I know that adulting isn't as easy as you might have imagined. However, making smart choices and being disciplined regarding your finances can make a world of a difference. This brings us to our last term. Credit report is a report of a person's financial information, including previous addresses, social security number, current and previous employer, estimated income, credit card amount with amount owed and payment history, and loan information. A credit record is a report of your history managing and repaying debt. It kind of works as a report card for lenders when deciding to do business with you. Within this report, lenders can find historical records of when you pay your bills, how much debt you're in, and how long you've managed your credit accounts. After my first downfall with credit cards, I got into a habit of checking my credit score every 2 months. Implementing good financial practices will allow you to be successful regarding your personal spending. Remember, it is never too early to get financially savvy. The sooner you understand what it is, how it works, and why it's important, the sooner you can become financially prepared for your future.